Earlier today, the Biden administration just announced their new plan to forgive student loans. Now, this is their second attempt to do so after their first attempt got struck down by the Supreme Court in June. And in this video, we're going to be talking about that and how it affects SoFi, along with other SoFi news that have been happening this week. Okay, so I haven't really talked about SoFi that much this week, and so I wanted to hop on this video and share what I've been seeing with regards to the news. First and foremost, I would say in the macro environment, we are in extreme fear territory with regards to the sentiment out there in the market. The last time this happened, I tweeted SoFi was trading in the $4 to $5 range. 2 months ago, back in July, when we reported Q2 numbers, SoFi was in the $11 range. We were at extreme greed in the markets. Generally, when the market hits extreme fear territory, it's a great opportunity to be buying because, as we know, over the short term, the market is fairly temperamental and emotional. Keep in mind that over this entire time, great companies are still executing on the bottom line day in and day out with regards to their operations, their product development, and overall seeing that strategy through to fruition. So SoFi's been doing that, as I've been reporting in previous videos over the past couple of months, regardless of what's happening in the macro environment. One example of that this week was the news around Galileo and FedNow. I first found out about this news on Reddit, just came out a couple of days ago. SoFi's Galileo will be a full service provider for FedNow, providing APIs for incoming and outgoing instant payments. This was posted on the FedNow site, so let's read and just dive a little bit deeper into what this means. The statement highlights Galileo will be a service provider to the FedNow service. Galileo will process incoming and outgoing FedNow transactions on behalf of banks, fintechs, and other financial institutions who use FedNow. The FedNow service may be procured as a standalone service or in conjunction with other Galileo products. We've been talking about FedNow earlier this year, all the way up until when it was launched earlier in the summer. And right now it has quite a few early adopters. There's several dozens of financial institutions that are leveraging the FedNow ecosystem. I think there is a distinction to be made though with regards to this news, because this doesn't necessarily mean that all the transactions by all of these financial institutions are now going to go through Galileo. It just means that Galileo's clients, i.e. the businesses that leverage Galileo, can leverage now Galileo's APIs to use FedNow. This does a couple of things. The primary thing that it does is it makes Galileo more attractive to future clients that are onboarding onto the platform, because it's just another tool in their entire ecosystem or their suite of offerings. Especially as more banks are onboarding onto the FedNow service, this is becoming more sort of commonplace, and Galileo is set to benefit off of that. So obviously that's very positive news, and it seems as though every single week SoFi's tech platform is releasing more functionality for their ecosystem. And going forward on the earnings on October 30th or 31st, we're expecting to see a resurgence in the tech platform, which is coming back up to speed in terms of their growth rates as well as their margins. Moving away now from the tech platform and onto the banking side, Chris at Data Driven Investing made a really great post here on X. I commented on this very powerful diagram here to just show a discrepancy between SoFi and commercial banks. So basically what the first diagram shows is that the M2 money supply, basically the amount of money in circulation, and the commercial bank deposits are in lockstep. They're moving at the same rate. Basically saying the more money that is in circulation, the more bank deposits you're going to have. But then you overlay the trajectory of SoFi's deposits over the same period of time, and you can see a completely different picture. There is no correlation at all. SoFi's deposits have just been ramping up, while a lot of these commercial bank deposits have been following the M2 supply. So obviously this is very bullish. And you can make a strong case to say that this is as a result of SoFi's execution. But one thing I will say here is that SoFi is still very new in terms of ramping up their deposits. Their banking side is just over a year old. So I would expect that's going to plateau over time. Just a point to say on the time frame in general there, like as the time frame gets more extended, that discrepancy between SoFi and other commercial bank deposits, and ultimately I think SoFi's bank deposits is to a large extent going to follow the macro, the M2 supply, but the time frame is really important there, right? Because right now it's super early, and as a result of that, there's absolutely no correlation. But if this was 10 years into the making, then yeah, you would see a correlation. Moving on to the last topic, the thing that I started this video on, CNBC posted this article earlier today. Biden administration announcing their latest plan to cancel student debt. They announced this at the end of June that they were going to work on a new plan, and earlier today they shared some more information on this new plan. The U.S. Department of Education released its initial agenda of policy considerations for its second attempt at delivering student loan relief. The Biden administration will focus on certain groups of borrowers in its new plan, including those suffering from financial hardship or who've entered repayment decades ago. Now, the original plan, the one that was struck down, was broader, only cutting out student loan borrowers who earned more than $125,000 or $250,000 as a couple. Now, this is an important point to note because the more narrow this relief is, the more targeted it is, the more likely it is to be approved in that regulatory process, right? They're not just going to do a sweeping declaration to say, okay, we're going to cancel 400 billion of student loans without congressional approval at all, because that's going to get struck down. That's what happened the first time around. Now they're actually going through the regulatory process and trying to get approval for this. And in order to do that, they need something that's more targeted than the sort of broad sweeping first try that they had. So I think that's an important point, is to focus on certain groups or people who fall into categories where certain criteria are met. We don't really know exactly what those criteria are. I would assume that's going to be as a follow-up. But as of right now, the information that we have is that it's going to be more narrow in its focus. Student loan payment resumes on October 1st. That is on Sunday, when the market opens basically on Monday, are going to be set to resume payments. Keep in mind that the interest has already begun accruing as of September 1st, but there is a grace period in place, something that I've mentioned in my previous videos with regards to the ramp up. This is something that makes me personally a little worried about the repayment, but we'll see what happens at the end of October when SoFi reports numbers, and we've had 1 month of repayment for them to assess or project outward what they expect and just to see how much that's going to impact them. Now, I think this last part is the most important piece as we head into 2024, and we hear more details inevitably about this plan. I'm just going to paraphrase real quick. Essentially, it's saying that the first time around there was this executive order, and as a result of that, it got struck down. This time around, they're going through the regulatory process to get approval. That takes a long time. Some experts are forecasting that it won't actually manifest until July of 2025, which is a ways away. And there's a quote here saying the Department of Education might try implementing it sooner, perhaps around the time of the election. Now, I found this to be the most telling sentence in this entire article, because the fact of the matter is that the election is around the corner. And one of Biden's main campaign promises was around student loans, probably his most famous campaign promise. So I assume that this would pick up steam again as we head into 2024. And the topic of student loan forgiveness in general is going to ramp up in terms of how often it's talked about in 2024, because that's inevitably going to be another campaign promise for Biden's re-election that's coming up very shortly. Either way, I think at the end of the day, we are in a place where student loans have resumed. SoFi is going to see a tailwind from that. We have a full quarter in Q4 where that's going to be the case. This in addition to the high interest rate environment with regards to personal loans, where SoFi is profiting with regards to the execution of the tech platform. I think the stock, was definitely down at $7.50. I think it rebounded back up. It's about $8 as of this recording. But the market right now is in that fear territory. So it's all a matter of where we go from here from a macro perspective. Everything is very interwoven. When the entire market goes up, SoFi goes up, and vice versa. But I do want to emphasize that as I make these videos sort of to recap the news around the week, that the company underlying is executing day in and day out, and the pieces of news that come out throughout the week further emphasize that. So regardless of what happens with regards to the macro, I'm just saying that in 2024, this is going to be talked about more often. Regardless of that, I think SoFi is still in a good place, and I'm looking forward to what the actual numbers are in the end of October. For right now, this is the Fundamentals Investing Podcast. Thank you so much for listening.